The real estate housing crash is canceled? I know. The economy is in shambles. And I know that the gurus have been calling for a crash for more than a year. But there is some new information that is coming out that is telling us something completely different. In this video, I'm going to give you the updated 2021 housing market report. It's going to show you exactly what you need to be watching for, what you need to be doing, and what will affect you and your real estate market in 2021. I'm going to show you how markets are moving in different areas and what you should be doing right now. So whether you're looking to buy, sell, or invest, the common misconception is that all real estate is the same, and it's not. It's very geographic business. Just because one area crashes has no effect on real estate 1,000 miles away. It's all about supply and demand. Now, if this is your first time here, welcome aboard. Our video channel here is packed with information about helping you avoid the pitfalls that are costly. So if you're ready, give me a thumbs up and let's roll. So right now we have two completely opposite things happening at the very same time in the nation. A pandemic has shifted everything. Lockdowns, high unemployment, forbearance, dollar keeps on dropping down in value. More restrictions, more regulations. All of this is happening at the very same time. All over the United States, we're seeing continued home price rises month after month after month. We continue to see low interest rates driving many consumers to locking in for 30-year mortgages. And we see bidding wars and multiple offers. So how high will prices go? I do see a few problems on the horizon. And I'm going to explain to you what you should be doing, because if you're thinking about getting in or out of the real estate market, watch this video to the end so you understand and you're going to know what to do. Now, let's take a look at what happened to the market and what's happening right now and what we see. COVID-19 has caused a crisis. Now, in some nations, the economic impact, or even let's call it a recession, has happened. So why have some parts of the world felt this economic impact much harder than the United States? So initially, the USA did have a shock in the stock market, and the stock market crashed, but it was short-lived, and it continues to amaze a lot of experts since it's been setting new records. In the beginning of this virus, everything stopped. It came to a halt. We had a massive reduction in buying, and everything from circulation of money, it came to a stop. Buying a new car, buying a house, or buying equipment, or it all came to a stop, and businesses actually shut down. So the Fed jumped in to help fix the economy. They lowered the interest rates to the lowest in history in order to stimulate the buying activity. Now, the Fed made it easier for people to buy homes, and that demand went way up. Now, remember this, supply and demand here, okay? One thing that you must understand is that the federal government will continue to pump money into this economy, and it will not stop. They are committed to these low interest rates. They continue to prop up the unemployed. They will continue to even more stimulus, and they will not let this economy crash. They will continue to print more money. So right now, some are taking full advantage of this once-in-a-lifetime event by locking into super low rates for as long as they can, for 30 years. And they're riding the wave of stimulus money. Now, continuous massive stimulus leads to overcompensation, which leads to inflation. And we're already seeing inflation, and the cost of everyday things has been going up in price. And this is just the beginning. But hard assets like homes, real estate tend to ride along with inflation. They tend to rise at the same rate. Now, that doesn't mean that every state in the nation or every place in the world here is going to have the same reaction. Each area and each market will continue to move independently So what you should be doing depends on where. Take a look at New York. When this pandemic set in, people wanted to flee the big city as fast as they could get out. Now, the supply and demand issue was here. As people left, prices went down. Home sales went down. As a matter of fact, it went down 50% in Manhattan. Now, that's a market crash, but it's specific to one area. It's not national. When the money was leaving New York, it was going somewhere else. So let's take a look at that migration. Just follow where money is flowing to. Now, I live in Myrtle Beach, South Carolina, and I can tell you firsthand, we have seen a number of people moving here because of low taxes and a low cost of living, and of course, a great beach lifestyle. But no matter where you live in the nation, if you're looking to make some kind of a real estate move, you really need to look at where people are flowing to and where they're moving away from too. So historically, obsolete properties and obsolete areas tend to collapse for much longer periods of time. And sometimes they just never even come back or return. So we look at history, there was a shift away from manufacturing, okay? In the United States, entire towns and cities that had factories never came back after the factory had shut down. So where people were leaving and where were they going to? So that's what you need to look for. You need to look at specific markets and even niches within your market to consider all types of properties. Now, comparing single family homes to condos or to multifamily or to a vacation property or even to luxury properties. Comparing just the marketplace in individual niches is not the whole thing. I've personally been investing in real estate for the last 36 years, and I've seen a lot of stuff during that time. I've even paid 13% interest on a mortgage back in the 1980s. So I can tell you firsthand whether the economy is good or whether the economy is bad, people have made money in real estate. Why? Because people still need a place to live. They still need a place to call home. And throughout history, there have been many, what I call common man, who have been able to build, create, and maintain long-term wealth through real estate. One thing's for sure. When you invest, the crappy properties from 10 years ago are still the crappy properties, even today. And if you go with quality, the top properties always are where people want to be. Now, there are three things to look for in 21 that can affect home prices, real estate investments, and home values. Number one, inflation. I did a video about this and I'm going to link it below, but inflation is when you have cash in your wallet or even in the bank and it goes down in value, lower and lower each month. It costs you more dollars to buy the same exact thing that you just bought a couple months ago. So the only protection that you have from inflation is with hard assets. They'll keep pace with inflation. Things like commodities or real estate, okay? Back in 1995, if you bought a house for $250,000, in 2020, it would be $419,000. And today, it will be even more for the same exact house. Does real estate always tend to rise? No. But if you look at history, long-term investing, prices do keep rising. And if it's a rental property, the amount of rent that can be increased over time, keeping pace with inflation, does happen. But many people are not old enough or don't even remember what happened to real estate prices back in the 1970s. Homeowners during that time never would have guessed that their house prices would have gone up by 250%. And we're seeing inflation again today. In just 1 year, think about this. What things cost more today than they did in 2020? Groceries, mail, postage, home improvements, lumber, furniture, health insurance premiums, energy bills, and of course, houses. Now, if wages remain the same during inflation, that makes the price of whatever product and services higher, and it's going to take more percentage of your income to purchase the same goods and services that they did back then. Now, does inflation affect real estate? It can make houses really unaffordable if you're trying to buy into the future. But there is a positive effect that can happen if you're an owner. It's a hedge against inflation because home values and rents typically increase or keep pace with inflation. Number 2, migration. While New York City was crashing and other places like LA and San Francisco were crashing, there are other places in the nation that are growing. Places with less dense population, lower taxes, and those are the places that are popular today. Many are looking to buy in these places, and they want to go places that are more affordable, like the southern part of the United States where it is growing. As an example, in South Carolina, we see a high net flow of population in the last few years. Now, that is a trend that's continuing. But with more big companies saying that employees can work from anywhere you want, and in many places you can work from home indefinitely, colleges, universities, they're all allowing work remotely as well. So there's a huge shift in places where people want to live, like the beach. They want lower costs too, okay? So number 3 is supply and demand. And as I said before, you've heard me say this, the common misconception is that all real estate is the same, and it's not. There's very geographic. So just because one area has an issue doesn't affect real estate in another area. It's all based on supply and demand. Home prices drop, though, when there's an oversupply in areas where people are moving away from. Now, supply and demand in real estate is not easy to balance out. You got to pay attention to the factors that influence where your local market is and make note of the upsizing or downsizing trends, okay? Some areas, they're trying to balance the supply and demand, and it might not even be possible. In some towns, builders can't even keep up with the fast pace to meet consumer demand. Scarcity also causes prices to rise when there's not enough land or enough homes to purchase. You know, even if the land is there, it takes time to construct a house, and it may not meet the immediate consumer needs right now if they need to move in. So the next question is should I buy right now? I did a video on that. Again, I'm going to link it below, but the answer really depends on where. If you're buying to live in a home personally, yes, buy now. Don't pay someone rent. Okay, if you lock in to a super low mortgage rate, it's even better. As long as you can afford the mortgage, the payments, and if you're going to stay there for a long time, like several years, it's a good move. What about an investment? If you're trying to flip on a property, no, don't buy. But if you're going to buy and hold as an investor, and you're looking at the current rate of inflation, it could be a big win for you. But you must look at all the numbers and the cash flow. Very important. If you don't think the property is located in a good area, don't buy it. Look at the cash flow. Look at the long-term migration patterns. Look at the demand. Just remember, all real estate, all areas are not the same. So I have a question for you. Question is, are you planning on buying? Or are you planning on selling? I really want to know. So please leave a comment below and let me know. If you have if you have questions, call our office because my team is here to help you. And if you like this video, please give me a thumbs up. I appreciate you guys. I just want you to know how much I really do appreciate you watching and commenting. If you watch one of these other videos here, I'm going to see you guys in the next video. So wherever you are and whatever you're doing, I hope you're having a fantastic day. It's Jerry with Jerry Pinkas Real Estate Experts here in sunny Myrtle Beach, South Carolina. Take care. All right, so tell me about where you were coming down the beach and you just said...
I saw Jerry Pinkas standing here and I learned everything I know about Myrtle Beach from the YouTube videos.
All right, awesome. I'm glad you're watching them. Anything you want to say to everybody?
Pay attention to the videos because you learn a lot of cool things. I learned about
Watch out, you're going to get wet.
The International Culinary Institute. of Myrtle Beach. I went and ate there yesterday, and I found that on one of Jerry's videos. I highly recommend it. It's amazing.
It is amazing.
And you can find everything you want to know about Myrtle Beach for vacation on Jerry's videos.
All right, you're awesome. Hope you're having a great day.
I am.
All right, take care, guys.
You too. I ran into Jerry.
You ran into Jerry, right? Yep.